Don't fight the Fed. So that works both ways. It works in a bull market, works in a bear market. When it is easy monetary policy, you don't want to fight the Fed. You want to go risk on. When it is difficult or constrictive monetary policy or tightening, you do not want to fight the Fed. It's risk off. So Jerome Powell came out today. He was swift. He was quick. One of his shortest speeches ever. And he just reiterated what all of the Fed board members have been saying, like we've been talking about all week, that they're going to continue to do whatever it takes to fight inflation. The key statement, the key sentence in his entire statement was, there's pain coming for businesses and for average consumers, and that's just the price we have to pay for high inflation. So he said that they are committed to bring inflation down no matter what it takes, even if the country enters into a recession. We know that there are global recessionary risks out there right now. Europe is definitely heading into recession. They have serious issues with inflation. So it's a very unique time in the economy, not just in the United States, but globally. But Fed came out, he regained some sense of credibility today by standing firm, standing strong, and communicating clearly that we are going to get inflation down, that inflation is far more destructive than a recession or anything else that we're dealing with right now. He also made it clear to markets, you're way too high, you rebounded too quick, I did not say what you thought I said. So do not fight the Fed. The Fed wants more constrictive in policy right now and monetary environment. So they want risk assets to continue to decline, to continue to pare back a little bit. They want the housing market to correct. They want stock markets to correct. They want demand to cool. And the only way to do that, the only thing the Fed can do is affect demand. They cannot affect supply. They cannot create oil. They can't create jobs. They can't create product, goods, services, but they can cool demand, which allows everything else to catch up. So there is more to come. We're just getting started, and the markets are reacting accordingly and as expected for a hawkish Fed. So the real question is going to be, how much downside are we going to see? Are we going to retest the lows in June? Is that going to be the bottom? So we're going to know real quick. Bitcoin is down in the 20,500, 20,600 range as I'm recording this. So watch the markets into the close today. As I always say, you will understand and you'll be able to measure investor sentiment into the close and how the markets close, the momentum into the close. By the way, the markets close, do they close down on the lows? Do they rebound? What does it look like? So we need to pay attention to that. And then also over the weekend with Bitcoin and crypto, we'll see how that plays out over the weekend. And the real question is Bitcoin going to hold those June lows? So the real test is coming. But remember, you don't fight the Fed in a bull market. You don't fight the Fed in a bear market. This is risk off. The Fed said we are not pivoting. We are not stopping. And the markets did not take them seriously before. They're starting to take them a little bit more seriously now. So I'll see you in the next video.